Hello, everyone, and good morning. Welcome to today's trading session. Um, the title of today's trading is if you can make $1 trading, you can make $100 as well. Because the reason I've said that is because the techniques and the know-how is the same. The problem is not making money. The problem is knowing how to retain the profits that you've made. Um, it's more of a psychological thing, your way of thinking. When you make profits, you overtrade and then you lose the profits that you've made. So I think, in my estimation, if you can make £100, or if you can make £1, if you can make 1p trading, you can make £10 trading. If you can make £10, you can make £100. If you can make £100, you can make £1,000. But so I just wanted to encourage you, if you're a struggling trader, all you have to get right is your psychology, the way that you think, the way that you enter your trades, and being able to retain the profits that you've made and not squandering your profits away. Now, it's probably easier said than done, but I use simple patterns to help me make entries when trading, as well as exits as well. And one of the patterns that I use would be the butterfly pattern, which you see here. So I've already drawn it in, but what I'll do, I'll cancel it all out. So for a butterfly pattern, you need a B completion at 786. So which this is. So you can see if you draw, this is my first impulse leg. My first impulse leg downwards. I'm trying to find. So this is first impulse leg. I forget. The first impulse leg downwards is just right here. Just trying to find the appropriate arrow. It's probably a lot better on TradingView. But anyway, this is the first impulse leg. Price going in the downwards direction. So you can see price going down. And what did price do when it hit this area? Price changed direction. So the retracement leg that you're trying to get is by how much did the direction of price change. And you measure that by making use of a Fibonacci retracement. So price changed direction by how much? By 786%. So it went up here roughly by 786%. Okay. As you can see, it went up. Okay. So that's the first indication that you have a butterfly pattern. Okay. The second thing that you then see is that price then changed direction again very slightly from the B point down. Now you want to measure by how much price changed direction again. Again, you use your Fibonacci tool and then you measure the direction of change. Okay, so that's about 618. For this to be valid, your direction of change when you measure C, this point here, C, needs to be a minimum of 382. As you can see, we've surpassed that. We've surpassed the next level, and we're at 618. Okay, that's the next change of direction. And then you then have, so you've got one change of direction, two change of direction, three change of direction, and you then have a fourth change of direction, which is right here. And for you to measure that again, you also need your Fibonacci retracement. So you draw from X to A. Okay. So you need a minimum of 1.272, but must not exceed 1.618. Okay. So that's what you have for your butterfly pattern. Okay. So if I draw this in, you do X to A to B, B to C, and C to D, 618. which is roughly about here, 618 retracement. And what happens? Price goes down. Once you hit that area, you can see price just went down. Okay. Now I'll be wary of this EMA, 50 period EMA, because what you have most of the time is price would normally respect the EMAs as it's doing right now. So price has hit the EMA area. It's moving now. So your first profit target is 382, which is right here. So potentially we could take profit here and exit the trade completely. Or if we're patient, wait for that profit target to be hit, which it has been, and also aim for the second profit target right there. Okay, so that's it for this trading. So let me delete all of this, make my chart a bit cleaner. First profit target, second profit target right there. Let's see if price will break this particular zone here. This is a very bearish candle. How much? So we've got 1 more minute. Let's see where the next candle opens. It's opened above. It looks like this support area is quite strong, or this 50 period EMA is quite a strong, has a strong support. I might just close this trade now. That's the other problem that you have in trading. So some people say that let your profit run and cut your losses early. Now, it's easier said than done. Cut your profit, let your profit run. They say that we are optimistic in a negative situation and pessimistic in a positive situation. So that's what I mean is, when you are in profit, you're always fearful that you're going to lose all your profit, then you cut your profit early. And when you are in losses, you always have this hope, a fake hope that, oh, price will go in your direction and you get back into profit. As you know, that's not always the case, because the market doesn't respect anyone. The market can stay solvent longer than you can. So it's not, always correct in that sense. So the dilemma I always have is, do I keep my profit running, or do I just take my profit and run? Now, it makes sense just to take the profit and run. But then again, I've done that so many times, and I come back, I said to myself, oh, I should have just kept the trade on. I would have gained a bit more. But in past cases when I've done that, I've also lost money. So it's a hard choice to make, and it depends on your own personal psychology, how risk averse or not risk averse that you are. But in this case, it looks like just staying on might be a good idea, because we've just gone beyond the 50 period EMA by a significant amount. Um, the best thing that I should have done, uh, I should have traded this with a stop loss and a take profit. So if I had a stop profit, a stop loss, I could have just adjusted this downwards and still be in a trade. So I'll be in what's called a free trade. But I've traded this without putting a stop losses in, which is not the best way of trading. It's not a best form of risk management to trade without a stop loss. Um, that's completely my bad. That's more of a trading psychology that one should have. Never enter into a trade without knowing when to exit the trade. Um, in my case, I've got a very small account. It's not a huge account. It's a very small account. I trade this as an experiment to see whether or not these patterns work. And from experience from trading this, I know that they do work. They don't work all of the time, but they do work, at least I would say 50% of the time. And that's a good thing, I would say. I don't know the technical or the explanation as to how where this is been derived. Some people think this is some sort of esoteric way of trading. Some people think it's just statistics, which I think it is. It's just basically statistics and human psychology being portrayed in terms of uh, candlesticks and the rest of it. So yeah, but it does work. So I've almost hit my second profit target. If price goes down a little bit more, then I can close the trade. And I'm trying to maybe trade once a day. Um, when I trade once a day, I normally make profit, but when I overtrade, I lose money. So I'm trying to just trade once a day, make my profit for one profit a day, and then move on. I'll enter into a second trade if the parameters of my trading plans have been met, and not otherwise. Sometimes I just enter into a trade because you see the candle shooting up and you think, you know what, I'm just going to go into this trade now because I think it's going to go all the way up, and then before you know it, it's gone down, it's gone against you, and then you're back to square one or square zero or square no money at all. But it's it's one of those things. It's more of a psychology than anything else. But having said all of this, I'd like to say that I am not a financial advisor. I do this for education and entertainment purposes only. And I hope that truly you're being entertained and educated at the same time. But if you do decide to trade, please carry out your own due diligence. Make sure you risk manage your trade to avoid any bad situations happening to you. So, having said that, please be careful. That's all I'm trying to say when you trade. Never trade an amount of money that you cannot afford to lose. Don't put all your life savings in trading unless you know what you're doing. Don't jeopardize your future. Don't destroy your future by being stupid. Okay. So that's a word for the wise. I hope you guys take it on board. Okay. Um, so this is what I mean. Let your profits run. People say that, but it's not always that easy, is it? Let's see if price would go down. Also like to mention, please do not forget to like and subscribe to this channel, and share as well. Share with other people, share with your friends and families and all whatnot. Please do not forget to like and subscribe to this. Okay. again, welcome back. Sorry, I just wanted to share with you that my profit target has now been hit. Um, I can either just, I'll close this trade now. Again, this is an example of a harmonic pattern working live. This is not a recording. This is a live trading, and it did work. I took my profit, hit both profit targets, and I'm out of the trade now. And I just wanted to share that with you. My rule now is to trade once a day. I've met that rule. I've achieved a decent amount of return. It won't break the bank, but it's still a return. And I've demonstrated that the patterns do work if you trade sensibly. I just wanted to share that with you. As I said, I've only made 50p, but if I've made 50p, I can make £50. If I've made £50, I can make £500. If I can make £500, I can make £5,000, because the idea behind the trading is the same. The only difference is the amount of money that I'm trading. So, but the idea behind it is exactly the same. I just wanted to share that with you. I hope you derive some benefit from following my trade. I'll like to end by saying I'm not a financial advisor. Please carry out your own due diligence when you do trade. If you're going to be watching this video in the future, I want to thank you in advance. And if you're watching now, God bless and goodbye.